You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, author of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome to the show, Danielle.
Hello, Jim.
Wow, what a bunch of topics to talk about today. Oil, real estate, reckless, dangerous bankers. Let's get in on the bankers.
Oh, what fun, eh? It's always such a lovely assortment of topics.
So
some days I get up and I think to myself, I'm not even going to think about all that stuff today. I don't even want to talk about who's corrupt and who's robbing who. I'm not interested. But then I realize that, if some of us don't talk about it, then the crooks keep getting away with it, and nobody seems to have any pressure to do anything different. So we got to keep up the good fight, I'm afraid.
Yes, they're found manipulating currencies. They're fined $3.4 billion. JP Morgan still under investigation for that. Before that, it was fraudulent mortgages. They're still doing robo-mortgages in the States where they just rearrange your mortgage without your knowledge and then charge you $200 more a month. What can we do about this?
Well, we just have to keep insisting that something be done. So the whole whistleblower story this week that came out with the Matt Taibbi article in Rolling Stone, Elaine Fleischman, who was the JP Morgan, she was originally a securities lawyer, went to work as a deal maker at JP Morgan, which was basically looking at the packaging of these mortgage loans that were put together in the 2005-06 period leading up to the last financial crisis. And she, noticed there was all these breaches of duty and misrepresentation of these loans, like they weren't doing due diligence, they were loaning money to anybody with a pulse, not checking, income data that was given. So they knew that there was, in fact, in some cases it was brought to their attention that the people had answered the questions improperly or with misinformation. And even when it was brought to their attention, the, rubber stampers at JP Morgan were just pushing through these loans. And so eventually the woman, Ms. Fleischman, was laid off in 2008, but she didn't know at the time that they had then repackaged these things as AAA debt and sold them to all the mom and pop pension plans in America and all over the world. And when that came to her attention, the Department of Justice was doing this investigation, et cetera, and she basically sent all these letters and evidence that she had saying, hey, this is what was going on. They certainly didn't, it wasn't a mistake. They knew full well that these mortgages were sketchy and really poor credit quality and highly likely to default. And then they turned around and packaged them as these AAA credits and sold them to unsuspecting buyers. So they, that's securities fraud. They made representations knowing that they were false for the purpose of getting people to part with their money. And anyway, when the investigation was underway, J.P. Morgan's chief, Jamie Dimon, my friend and yours, he made a phone call to the top investigator above the one that was dealing with Ms. Fleischman and basically made the case go away so that the criminal investigation aspect was dropped. And J.P. Morgan ended up, with a settlement, which, again, a settlement that named no one, that admits no particular actor's fault, but simply says, we may or may not have been, doing something inappropriate. Here's a few $billion to make it all go away. And as we've said before, that may sound like a prohibitive or deterrent fine, but for these institutions, it is chump change. It is simply a cost of doing business. Nobody is ferreted out. Nobody is, prosecuted or held accountable, so the people just go back to doing it. And we have had an epidemic of fraud worldwide, and it's not surprising, Jim, because everything that was going on leading up to the financial crisis was rewarded and maintained and sustained and promoted and bonused, and so it just spread. So they went from, just manipulating a few things to manipulating everything. And we've had 6 years now of them cutting these deals where they they neither admit nor deny, write big checks, and it just goes on business as usual. And it's just infuriating for anyone that cares about things like fairness or rule of law or democracy, and they are surprised. What I find really remarkable is, there was a story today that 24% of millennials, the 20-somethings today that have borrowed all these incredibly high levels of debt for student loans, 24% of them say they expect that the government will at some point wipe out the debt, so they don't intend to actually have to pay it back. And people are outraged. They're saying, how could these young people think that they wouldn't have to make good on their loan? And my point would be, why would anyone living in the free world today think that they should be held to their promises, have to be accountable financially, when all of the big picture, leaders, politicians who are rampantly insider trading, all the big heads of these financial institutions have literally got away with every kind of robbery under the sun. And people are surprised that there's this proliferation of, fraud and lack of personal accountability in all levels of society. Well, it's because it's so widely tolerated, and it comes from the top down. So people see that and think, well, hell, why not? I might as well do this. I might as well do that. Pensions have been using these inversion tactics, Canadian pensions even, hiding money in various countries because why not? Luxembourg, why not? Everyone else is doing it. And of course, once you get into that argument, it's right down the poop hole because all standards go to the wind, and it's a race to, be the most corrupt person out there. And so we have to really turn this tide. We have to push back and insist that we break this pattern. Otherwise, it will never get better.
Well, obviously politicians are in collusion with these banks because the politicians haven't passed any laws holding the bankers responsible.
Mm-hmm, exactly. So it's twofold. It's both that the politicians, have not made tougher rules when they've been circumvented. When people have shown to get around and work through loopholes, they haven't had any political will to pass tighter rules. And second of all, the regulation arm has been underfunded and undermotivated and basically captured by the industry because they have a revolving door between the regulators and the firms they're trying to regulate, and that's been documented ad nauseum. I mean, there's no defensible argument here. This is not a debatable point. It's been documented by tons of books and articles and people who can say, look, here he was here and then he went there and now he's back at this firm making a few $1,000,000 a year, teaching them how to avoid the regulatory, limits on things. I mean, it's a beautiful career move for these people. But the third aspect of it is it's even more obscene than that when you realize that the actual criminal prosecutors, so the Department of Justice, people that should be bringing the criminal charges, not just the regulatory breaches, which is what they keep negotiating these civil settlements under, but the people that are mandated to stamp out, fraud, are literally getting calls from higher ups who are chums and buddies of the seniors at these banks, and they're pulling the charges. They're making it go away. They're saying, don't bother prosecuting that or pursuing that. Just let it go. And so that's why, people like Ms. Fleischman come forward knowing full well that they are going to be in for a firestorm because these banks are so heavily lawyered. They have hundreds of billions of dollars set aside for legal fees. And, it's extremely hard to stand up to that, especially when you can't get the actual authorities who are supposed to be enforcing the law on your side, to actually do their job. So it is a very poisonous environment for everything positive and transparent. Anything that's to do with true innovation is being damped in the society in favor of these quick, easy bucks that are being sucked out by a certain few. And so the inequality gets worse and the public unrest slowly grows. But at some point there has to be a tipping point because it's really a recipe for, going nowhere fast. Just adding more debt, spinning our wheels, not accomplishing anything, no progress, greater inequality, slower growth. The more debt they add on, the more indebted people are, the less we can accomplish in terms of the economy. So it's really a vicious circle.
I've found when they do hold hearings on this, they don't ask appropriate questions. For example, Ms. Fleischman would be there saying, I was there when they were selling toxic mortgage packages to these little mortgage companies. And during the questioning, it will be, Ms. Fleischman, where did you get that jacket? What color of bus did you take to work today?
Yeah.
That's not going to get to the bottom. I mean, they're deliberately asking the wrong questions.
Or the Senate or the government arms have these hearings and they parade in these executives and they're bowing and scraping, thank you so much for coming today. Thank you. So, this is just absolute nonsense. The deference that's given is just unjustified and totally toxic. So, I relish the Pecora Commission because I read the transcript from time to time and listening to the cross-examination. I mean, I was a lawyer, I was an attorney in litigation for a number of years before I even came into finance. I've been both a witness and a cross-examiner in proceedings. I know that you can you can ask pointed questions and not let witnesses off the hook when they try and evade your answer. You can hold them to it, but you have to want to, right? And you can't be so overly, polite that you don't want to, call them out on things which are complete lies, obviously. And the executives have been they literally are the highest paid sector of the world, okay? The finance industry has the highest average pay of any institution or any sector. And the higher ups, the leaders, the executives, take these huge compensation packages, and yet they do not want to be accountable for anything that goes on. So they want all the guts and glory, like all the when it's going up, when profits are growing, when they look like superstars. They literally travel the world like rock stars with all these cavalcade and every perk and deference in the world. Hobnob with all the government officials, and everybody's so grateful in their presence and all this stuff. But when it comes to bad things happening, they're always, we didn't know, and I wasn't aware, and I can't recall, and this is the nonsense that we cannot let people away with. There is no other professional on the planet that would be allowed to take all the upside and yet, defer and say they have no memory. Like imagine a surgeon, having some malpractice suit and him saying, well, it's not my fault because I wasn't aware, I didn't know, or even any other profession you can think of. That's what holds people accountable personally, and that's what we need to get back to. But again, they don't see themselves as a profession. Bankers see themselves as salespeople, and yet when it comes to advising communities, governments, institutions, households, they then want to be seen as the advisor, right? The financial wizard. But in truth, as soon as there's a problem, they say, well, I wasn't the advisor. I was just selling a product. And, the SEC Mary Jo White, there was an announcement this week that they're back considering this whole thing about fiduciary duty and should they hold those giving financial advice to the standard of fiduciary duty. Well, of course, the industry doesn't want it. They push and lobby and, infuse it with all this complexity because they don't want to be held accountable for what they say to people. They just want to sell them stuff. And I just think that is the most obvious place where we have to start with revamping this whole system. If you're not prepared to say that you're a fiduciary advisor, you shouldn't be allowed to give people financial advice. You can say, I'm selling you a product, here are the products I have to sell, this is how I make my commission, but you should never be allowed to say, I'm your advisor. And that line must be drawn back on the road, and we must divide up the risk selling from the advising arms and from the banking arm, which is backed by the taxpayers. That's the other repugnant thing here. It's not just that these people are not taking personal responsibility for their malactions, but they're literally downloading the losses and risk entirely onto the taxpayers all over the world. So it was interesting, that clip I put of the news reporter out front today in London, in the city of London, outside the RBS headquarters. And he's just saying, he voiced how I feel about it. I mean, 6 years of watching and reporting and pointing out how outrageous this conduct is. And he said, I'm so sick of standing here watching this, as we pandy to these criminals. I've been in the boardrooms where these, cufflink-bearing executives are pleading with the regulators not to make them accountable, not to make anyone in the boardroom, eligible for criminal prosecution, all this nonsense. And we keep letting them off the hook. And it is a repugnant chapter in human history. There's no doubt about it.
Well, what about the Bank of Canada Governor, Stephen Poloz, advising if you're young and can't find a job, you should work for free?
Well, that's the model that's been going on in the U.S. for years now, the internships, right? And it's a complete abuse of the working populace because, yes, young people need experience, but what these companies are doing at record profit levels, PS, is just, using them like a free source of labor. So there's no sort of sense of obligation. If the person works even for months in a year, and does a great job, instead of saying, you know what, you've done a great job and we're going to reward you with a position, they say, well, there's 10 other guys out there who will work for free for us for the next year. And so it's a form of free labor and abuse. And the kids are getting some experience, great, but in the old days there would be some moral sense of obligation that if they did a good job for you, if they worked for you in good faith and you thought they were capable, that you would give them an opportunity as reward, clearly, because no one can afford to do repeated rounds of internship for free. So this whole mentality has become just so abusive. It's so little respect in any of this to anybody involved. It's all about how much can I rip people off, how much can I gouge out of the system, what free money can I get away with, what can I download onto governments who are, governments are supposed to be this nameless fund of source of funds. That's all of us are government. We are the people funding it through our tax payments. So, and shouldering the debt responsibility. So my number one beef with this whole thing is that we've become these cowards that are hiding behind these legal structures, corporations, governments, and no one's taking individual responsibility for their actions and for their misactions, right? So it's, I think that the system is literally breaking down like that. We literally have to revamp the whole thing and go back to, not being allowed to hide behind these constructs.
We'll have more with Danielle Park right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. I'm Jim Goddard. We're talking to Danielle Park. Danielle, I wonder what's going to happen with the price of oil going down. They're saying, the government's going to be short of revenue. Yet somehow Mr. Harper and his minions have found a way to give a $3 billion tax break to people who will likely vote Tory.
Yeah, so that was a commitment they made running up to the next election, and they want to go forward. They want to deliver on their promise and all that sort of thing. But, the fact of the matter is that at $75 oil, which is what we have today, Jim, and that's a hell of a difference to your budget than, $110 oil or $100 oil. And if you look at the break-even costs, all over, we ran into that in the last couple of years with the gold miners, right? The gold miners were reporting that their break-even costs were something like $600 an ounce for gold. But in truth, their break-even, when you had full cost accounting, was more like $1,100 or, in some cases, anything higher than $6, let's put it that way. So their profit margins kept coming up disappointing to people who were listening to them, because they kept saying, well, you should be making X $100 an ounce even at this price, and they weren't, right? So the same thing has happened with oil. They've been through this period of elevated pricing. It's a bunch of factors, right? First of all, it was the credit bubble that allowed people to consume like crazy all over the world. When that burst, oil plunged in the '08 recession. Then you had stimulus initiatives, right? People piling in QE speculation, the carry trade, all that into commodities of all kinds up until 2011. And then you also had all this HFT trading, crazy stuff going on. On top of that, you had price fixing in all these institutions, as we've just alluded to. So really, the true market forces haven't had a lot to do with the price of some of these things for periods of time, long periods of time. And since 2011, most of the commodities have been falling, notwithstanding various forms of this kind of manipulation. So when oil broke through 80 recently, and you see that there is, continually, the global demand picture is weakening, no matter what people say. I know they're all convinced now that the U.S. is decoupling. That's never happened. And the world economy is greatly integrated. So if the rest of the world, Japan, Europe, all these major growth areas are in decline, and they are, you're seeing a plunge in the need for fuels. And so that, on top of the exodus of a bunch of these price-fixing institutions, have been slowly backing out of the commodity space over the past few years. So you're getting some price discovery, and I see grounds to expect that that could continue for quite a while. The other major factor here is the U.S. dollar, which, as we've alluded to over the past 3 years, has been strengthening, and has broke through another major target in the past week. So as that happens, as the U.S. dollar index strengthens against all other currencies in the world, that things that are priced in it, for example, oil, drops in value. And because the U.S. dollar is very likely in the midst of a secular breakout, not just a quick blip, but a long-term strengthening cycle, then you could see oil move much lower. So very interesting, for example, not only Canada, places like Venezuela, where they're saying that the break-even cost for the government's budget is $120 a barrel, and today again at 75, they've got a huge deficit. So you start to see the ramifications of this. So government bonds in Venezuela are plunging, like down to 56 cents on the 56 cents on the currency. So that's the early stages of a great dislocation, because people are realizing, wow, if the price isn't bumping back up soon, is indeed getting worse, then these budget deficits are going to gap wider and wider. And I think the same thing comes back to Canada. I think that the Conservatives have been very confident, because we had the commodities revenue into 2008, we had some rebound into 11, and they've been factoring in this expectation of ongoing strong energy prices. Well, it's not happening, folks, and if it continues in the patterns that are playing out right now, you could have oil back at secular support, something like $50 a barrel. So imagine how foolish they're going to look giving these tax breaks at a time when revenue is exploding. At some point, people have to be pragmatic about the math of these things. It's like that other clip I was talking about, the housing market and the U.S. real estate market. There was a developer being interviewed this week on Bloomberg, and he was talking about the fact that the Waldorf was just bought by Chinese investors for an exorbitant amount of money. And they were saying, wow, the Waldorf Astoria is now, this is reminiscent of when Japan was buying up the world back in their credit bubble peak as well. And, now Chinese money's been buying up the world the past few years, and is this like a high watermark? And he said, well, I have no doubt that we're going to see another massive real estate decline, because people are paying insane prices again. If you do the math on what they paid for the Waldorf, you'd have to rent out the rooms at $1,300 a night. And, if you go on Expedia today, you can get rooms at the Waldorf for about $500 a night, and probably less in some seasons. So there's no question that the asset appreciation that's gone on the past few years, there's been this huge inflation in, real estate, some currencies, commodities, stocks like crazy, and some bonds as well, and high yield debt for sure. So when you see that the prices make no sense on an investment basis, then you say, wow, well, how's this going to work out then? It's reckless deployment of capital. It's speculating more like going to the casino than it is investing. And when the numbers don't work, they ultimately are revealed as a bad call. And then all these people who are taking victory laps right now for their supposed investment acumen, because they've been in these, bubble runs the past few years, are revealed to be, frauds and fools, because they've overpaid. And the thing that people miss is that if you overpay, then that locks in poor investment returns for years after that. Because it doesn't make sense on a cash flow basis. You have to find a greater fool who can buy it off you for an even higher price. And once everyone's overpaid for everything, then the cash flow starts to go negative, and within a certain amount of time they want to download and get rid of these assets that are dragging their cash flow. And that's when, you find out that there's not enough buyers willing to pay these silly prices. So it's been everywhere in every asset class, and I just think that the topic of our recent client letter was peak everything, and I actually think that we've seen peak everything in terms of crazy valuations and prices. And even if they pour more QE into these things. Like there's all this talk about the Japanese making that October 31st announcement that they're going to do another kamikaze run at QE. Well, that's great, but when you do the math on that, it's less than the Fed was buying. The impact, for example, in North American equities would be less than the $85 billion a month that the Fed was buying in their QE program, and this would be a one-time hit. And meanwhile, stocks already soared much higher on the expectation of that buying. So, anyone that buys it now is even get worse returns over the next 8 to 10 years. So anyway, they've really made a fine mess of it, Jim. And, I just remain very, optimistic. When things can't get worse, they can only get better. And for me, that means some price discovery, some holding people back accountable for criminal acts, and some getting some rules back on the road.
Would you call these big tax cuts for a very select few people in Canada negligent or reckless on the part of the government?
Well, I have said for a long time, I don't find anyone fiscally conservative today. I think that governments calling themselves conservatives, what they mean is they want to cut a bunch of social spending, and that's fine, but if they also want to give more tax breaks than are justified on the math, when the revenue takes a hit, what should any responsible financial manager do? If your revenue plunges, you should cut your expenses and you should stop giving tax breaks. You should look at ways to increase tax if necessary, right? I mean, all these things people want in the society, you have to earmark a cash flow for them. So if you want to afford a tax break, you have to be honest and say you're taking money away from something else. If you want to spend money as a government, if you say you want to spend on an infrastructure or something, you have to, figure out where that cash flow is specifically coming from. Otherwise, you're being a reckless financial manager. And it doesn't work for families, and it doesn't work for companies, and it doesn't work for governments to do otherwise.
Danielle, thank you very much for talking to us. I hope you've got some of your frustration out, but
this is like a therapy session for us now, Jim. Thank you.
Yes. Did you love your mother?
Yes, I did.
Thank you very
much. And I
much.
do have a sense of humor. Honest, I do.
Thank you again.
Okay, Jim. Take care.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, and she's the president of Venable Park Investment Council Incorporated. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.